Hey everyone, welcome back into our latest TDR Podcast. I'm your host, Shad Dales, where today I'm going to talk about the chaos in the Middle East and why it's driving gold to record numbers. With escalating Israel-Iran tensions, gold just hit a weekly close above $3,400 an ounce. But why does geopolitical turmoil send gold soaring, and could it skyrocket even further if this continues? So with that, let's dive into it. So let's talk about the recent news. Last week, the market saw gold climb to $3,400, ending the week above that level for the first time ever, according to Kitco. The trigger? Escalating tensions between Israel and Iran. Israel airstriking Iranian nuclear sites, and Iran launching drone and missile strikes in response. So when you look at it, gold really is the ultimate safe haven asset. Investors turn to it when risk and uncertainty spike. So here's why it skyrockets in a crisis. 1. The fear and flight into safety. Gold's perceived security drives demand when stocks and oil are volatile. Number 2 is inflation hedging. Oil prices surged. Brent crude jumped nearly 6%, raising fears of global inflation. 3 is monetary policy expectations. The U.S. job market shows cooling with inflation easing, which pushes odds of a Fed rate cut higher, making non-yield assets like gold more attractive. And with that, markets moved fast. For example, spot gold jumped 1.3% to $3,427 an ounce, and futures were up 1.4%. Mining stocks surged like Barrick, Newmont, Franco-Nevada, and others rallying behind ETFs like GLD and GDX hitting record highs. Oil also spiked but then dipped. Brent briefly hit $78 before settling near $73, and markets shuddered. Stocks fell. The S&P was down 1.1%. The Dow was down 1.8%. So treasuries rallied and the VIX surged. So putting this all together, where do we go from here? There's 2 possible paths. 1 is further escalation. Could we see Strait and Hormuz disruption? It might cause oil prices to surge again. Then there's refinery and shipping risk. Forever strengthens gold's bid, along with Deutsche Bank, who warns stagflation risk, which is a gold bull scenario. And then the other possible path is number 2, diplomatic de-escalation. If Iran and Israel step back, oil and gold might cool. Markets already saw some profit taking, where gold eased 0.5% recently. But with tensions still high, the bias remains upside for at least a few weeks. So really, what's next, and how high could gold go? Kitco notes gold might challenge $3,500 an ounce if unrest continues. Also, analysts flag psychological resistance, but once broken, we could see $3,800 to $4,000 territory mark. And gold miner stocks and ETFs already are pricing in more upside. GLD and GDX at record highs. Good time to be in gold right now. So here's your watch list. 1, Middle East headlines. Any new strikes of actions can cause markets to move in minutes. And 2, also look at oil price action. Persistent supplies worries equals gold's inflation hedge becomes more powerful. Then finally, number 3, which is the Fed outlook and inflation data. Softer data plus rising geopolitical risk amplifies gold's appeal. And one more at number 4, miners and ETFs. Follow GLD and GDX for leading indicators of sentiment. So again, to wrap this all together, chaos in the Middle East drove gold to an all-time weekly close over $3,400, fueled by risk flight, inflation fears, and easing Fed pressures. If tensions escalate further or spread, gold could easily edge towards $3,500 to $4,000, but a diplomatic breakthrough could cool things. So keep your focus sharp. This is a pivotal moment for safe haven assets, and really an interesting time for gold. And with that, hit like if gold matters in your portfolio. Drop your comments below. Let's keep this conversation going. And how much are you paying attention to this right now? If you found this information helpful, make sure to share it with your network. Smash on that bell for all notifications. And like I always say, stay open-minded, stay connected, and I'll see you next time in our latest TDR podcast. I'm your host, Shad Dales, and thanks again for watching.